Okay, when you come to disposal, now imagine your company is doing a construction and you have a lot of this truck, and let's say this example, you purchase one truck in year 1 for 50,000 and yearly depreciation is 5,000, and you sell for 30,000 in second year. So how are we going to record into your accounts? First year when you record, it will be 50,000 in your cash and bank, and then carry down to next year. And when we come to next year opening, you have 50,000, but you're selling it in this year. So you're going to transfer the whole truck to your disposal account. Disposal account is a temporary account for you to record down, to calculate the gain and loss for the disposal. So bear in mind, when you transfer to disposal account, you must transfer the whole figure, 50,000. You cannot transfer 30,000 there only, because this is the only truck that you have in the account. Okay, so if you calculate, then you will notice that you have a loss of 15,000 for the year after minus off your accumulated depreciations. So this is a simple way of how you should record your disposal account. Okay, now we'll come to tangible non-current asset. So if you look at this chapter, this is your learning outcome. Okay, now next. So here, first thing we need to know, what is the different type of non-current asset. For example, land and building. Tangible non-current asset, yeah. Non-current asset, anything that you can use for more than 1 year. Okay, anything you can use for more than 1 year we'll consider as non-current asset. Now, tangible non-current asset means anything you can see, you can touch. Okay, for example, your land and building, you can see, you can touch. Fixture and fitting, office equipment, your computer, printer, all these things. Fixture and fitting, your light, your aircon. Okay, plant and machineries, motor vehicles, all these considered as tangible non-current asset. Now, if you are Panasonic, you have a lot of these electronic things, right? So you need to know what is your asset, what is your stock. So here, anything that being held for resale purpose, this is your stock. Okay, these are not your tangible non-current asset. For example, Proton, you have a lot of cars. Is that all your motor vehicles is your asset? Basically, all that we call it is your stock. It's not your tangible non-current asset. Unless that motor vehicle is used by your company, then yes, it's your non-current asset. Okay, now now when you calculate the cost of your non-current asset, okay, when you calculate the cost of your tangible non-current asset, the first thing you need to put in is your cost, how much you pay, and then also include your delivery cost, installation cost for your machineries or your aircon, anything, professional fees incurred, and any preparation cost for it. So look at these examples. You buy a land, okay, and you pay cash for the following: accrued for property tax, okay, remove of all building, 1,500 for the surveyor fees, and you incur fencing and lighting. So you're required to calculate the total cost for you to buy the land. Okay. Now, most of the time, the land, the cost is only this for fencing and lighting is not your cost, because the cost of the land, yes, this one, yeah. Are you guys clear? Next. Second, if you try to do this, you should get the answer. Okay, now next. This is the main topic you should learn in here: disposal of your assets. Disposal of your asset means that you're selling your asset. Okay, you're selling your asset, but then it's not a sales, it's a dispose of your asset. Okay, we don't call it a sales. Okay, sales means selling your stock. So disposal of the asset is a selling of your asset, but we don't call it sales. Okay, now disposal of an asset here, sometimes they need to sell or dispose an asset before it reach the useful life. Means that maybe you change to a newer version, or maybe you want to change to different model, then yes. Okay, the example, for example here, newer or more efficient model, that's why you change your old one to a new one. So you sell your old machines, or you don't need the asset anymore, then you sell the asset. Or the asset is broken, but you can still sell it for scrap value. Some of your car maybe is broken, or machines you can still sell for the spare parts. Okay, so this one we call it disposal of the asset. Now, disposal account. This account, if you look at here, this account is a temporary account. Okay, temporary account means that it does not fall under ADE or LCI. It does not fall under these two categories. You use this account, temporary account, to calculate either gain or maybe loss. The main purpose for you to open a disposal account is for you to calculate gain or loss on disposal. Are you guys clear? At the end of this account, you shouldn't have balance CD, you shouldn't have balance BD. If you have balance CD, BD means something's wrong there. Okay, guys? Clear, huh? So if you look at this account, first you will have non-current asset on this side, accumulated depreciations. Bank means the money that you receive or we call it the selling price. And then if you have balance on this side, it becomes gain. If you have balance on this side, it becomes a loss. Now the format is the same. No matter how you do it, the format is always the same. Okay, so let's look at this example. If you have a machine cost 10,000 and you sell for cash, accumulated depreciations is this. So how are you going to record here? So accumulated depreciations, this, you sell it for cash. So let's say you're selling it for 2,200. Machine, let's say your equipment, machines account, the cost is 10,000, brought down from last year. Now you sell it, right? So transfer to disposal account. 10,000. So machine account become 0. Nothing left in your machine account. You clear? Because you sell that machine. So machine account should become 0. Okay. Now accumulated depreciations account. Opening here. Okay. Opening is 7,750. Okay. Now during this year you sell it as right, so transfer everything to disposal account. Transfer everything to disposal, 7,750. Now, disposal account, accumulated depreciations account also becomes 0 because this asset no more. You sell it already, so accumulated depreciation account for this machine becomes 0. Are you guys clear? If you sell this asset, anything related to this asset should be 0, no more. Okay. Now, so what's going on in your disposal account? If you look at here, double entry rules. So here you should have a disposal account. Machines, double entry. Here, debit, credit your machines account, debit your disposal account. So you have machines, 10,000. And then accumulated depreciations, you debit here. So in your disposal account, I should credit it. Now, accumulated depreciations, 7,750. Now, Christian tell you selling price is 2,250. So you have received money from bank, 2,250. Now, in this case, you don't have gain, don't have loss. So, no gain, no loss. Are you guys okay? So, your double entry, here disposal account should look like this. No gain, no loss because just nice, the figure. Okay. But if your selling price is 1,000, just now it's 2,250, right? But if the selling price is 1,000, then would it make a difference? Yeah, you have a loss. So how are you going to record this? So same thing, equipment account, accumulated depreciation account, still the same. Okay, then you have your loss here. Okay, loss means when you come to income statement later on, in your income statement under expenses, you write that loss on disposal. You write a loss on disposal 1,250. Get it? And then if your selling price is 2,008, so what should you record? Basically, you will make a gain of 550. So it means that later on in your income statement, okay, under other income, you write gain on disposal. Okay, total 550 gain on disposal under other income. Let's try this exercise number 4. If you look at here, they have an oven. They bought it for 200,000, 10% per annum. It was sold for 100,000 in year 2007. Here is 2015. Here is 2017. Means that 1 year, 15 1 year, 16 1 year, and 17 1 year. After 3 years, they sell it. So you need to prepare 3 accounts: equipment, accumulated and disposal. So if you look at your equipment account, yeah, you buy in 1st of January 15, right? So equipment account here. Let's say you buy by cash, 200,000. So year end 31st December 15, balance CD, you have 200,000. Then 16 balance BD, 200,000. 31st December 16 balance CD, 200,000. And come to year 17 balance BD, 200,000. And come to 31st December 17. Do you still have balance? According to the question, you dispose it, right? On 31st of December 2017, you sell it for 100,000. So you sell it, so you go to disposal account. But should you record 100,000 or 200,000? Bear in mind, in your equipment account, you record everything in the cost, not the selling price. Okay, you record everything in the cost. So here you dispose it, although you dispose it for 100,000, but the cost that you buy this asset is 200,000. So you record 200,000 here. So by right, it should happen here, 200,000. Okay. Now, what will happen if you record 100,000? If you record 100,000, it will look like this. First, and then balance BD 200,000, and then year end you record 100,000 disposal. If you record it this way, means that you should still have a balance of 100,000. But the problem is this asset you already sold it. Where is this balance 100? Nothing. You don't have this asset anymore. So if you record the selling price, your account is strong. Get it clear? Okay. Now next. Okay, come to this depreciations account, accumulated depreciations. So first year 31st of December on 15, you have depreciations, double entry, yeah? And then here you have 20,000 because 10%. 20, here you got 10%. So year end carried out, you have balance CD, 20,000. And beginning of next year, 16, so you have BD, 20,000. Plus current year depreciations on 31st of December, 16, you have another 20,000, so total 40,000. So here, 20, in total you carry down 40,000 to next year. Okay, now then go on to year 17. Your BD is already 40,000 plus current year depreciation is 20,000. So total you should have 60,000. Now, if you didn't sell this asset, you should have this 60,000 carried out if you didn't sell it. But now because you dispose this asset, so no longer carried out, you have to transfer everything to disposal account for you to calculate your gain or loss on disposal. Are you clear? This 60,000 you cannot write carried out, you have to write disposal for you to calculate your gain or loss on your disposal in the disposal account. Get it? So here carried out, no more, you record it into disposal account here, disposal. Okay? So in your disposal account, here you should have accumulated depreciation just now, 60,000, and you should have this in your machines account, 200,000 the cost just now we record, right? If you still remember this one, 200,000, this one, 200,000 the cost. Okay, so here you have 200,000, and then bang, the machine was disposed for 100,000. So if you look at here, you make a gain or loss, you have a loss of 40,000. So your disposal account should be closed here. You should not have any carried out balance, yeah? Get it clear? Trading transactions means that instead of using cash, I use my own machines to exchange with a new machine. So look at this. This business, they have a total machines of 110K. Okay, 110k in terms of the cost. And then accumulated total is 70,000. Now, depreciation is 20% per annum, and a machine which purchased exactly 2 years ago. So you have an old machines you buy 2 years ago for 30,000. Now you want to exchange for a new machine. So you have a new machines here. New machine cost is 60,000. The trade-in value. The trade-in value is 19,000. This is trade-in value. Now how much is the depreciation? 1 year 6,000, 2 years 12,000. Okay, so let's look at this. How should we record this? So now, just now disposal is 30,000, right, for the old machines. Here, this old machines, so you record 30,000 here. And accumulated depreciation is 12,000 as we calculate. 30,000 per year for 2 years, so 12,000. Okay, so these two you have to transfer to your disposal account. Remember, it's a double entry. So in your disposal account here, you have 30,000, you have 12,000. Now, trade-in value, just now we mentioned trade-in value is 19,000, right? So you put in. Now, under a normal situation, if you sell it by cash, you should write bank and then 19,000. But because this is trade-in, so you record 19,000 here. Instead of writing bank, you write trade-in value, okay? And you write the plant and machinery because you trade in for another plant and machinery. So in this disposal, you still have a gain of 1,000. Now, how should you record in your plant and machinery account here? This double entry, yeah? So you go back to your plant and machinery account, you record disposal. This is trade-in. Okay, this is trade-in for your disposal. Now, how do you get this figure? Remember, the machine we buy is 60,000 minus the trade-in value K, 19K. You still have to pay 41K. So question never mention you pay by cash or bank, so you just write either one is okay. You guys clear? Next up. So try to do this exercise and I'll give you the answer in your e-learn. Okay?